Welcome to the Stock Health series. In this series we are going to look at certain parameters and get to the final health score of the stock requested by you in the comments section. This is an advanced version of our basic explainer video. Please check out our Stock Health series explainer video first to fully understand this video. Link for the same is in the description. So let's start today's video. Today's stock is InterGlobe Aviation, also called Indigo, which was requested by one of our amazing subscriber. It has a market cap around 2 lakh crores and stock price around 5,700. Indigo is in the airline industry with a market share of approximate 64%. They have current fleet of 420 and have future orders of around 950. Currently Indigo is serving 90 domestic and 40 international destinations, with additional destinations soon to be added to the list. Overall growth of aviation industry is around 8%. Considering all the points, Indigo gets business model score of 7 out of possible 10. In case of liquidity, let's look at these three parameters. Debt to equity is close to 0, which is great. Interest coverage is also above 2. And the current ratio is 1.5, which is good as it is also above 1. The only problem here is Indigo has a lease liability on aircrafts, due to which interest coverage is not that high. So we have a liquidity score of 3 out of 5. For activity score, let's look at the cash conversion cycle. Here, days of sales outstanding is 3 days, days of inventory on hand is 49 days and payables is 240 days. So we have cash cycle of minus 188 days. In case of Indigo, working capital is minus 123 days. Here the working capital is considered under heading unearned revenue, which means ticket prices are collected first and there is a liability of service to be delivered. Here negative working capital shows that the trips are pre-funded by passengers, hence there is a net cash inflow, which is great. So we have activity score of 8 out of possible 10. For profitability score, we will be looking at NPM, ROCE and ROE. In case of Indigo, it has recently gone from negative to positive. Looking at the trend, we can also see that profitability is improving over time. Considering this data, Indigo gets a profitability score of 3 out of 5. In terms of governance, promoter holding and pledge percentage are very important. In the case of Indigo, promoter holding is around 43% and there are no shares pledged. The trend of promoter holding is declining over the years, which is not a good sign. So in the case of governance, Indigo gets 5 out of possible 10. Consistency and stability can be measured using standard deviation on NPM, ROCE, asset turnover, and inventory turnover. Here all the numbers are above 10, which shows inconsistency in data. So, Indigo gets merely 1 out of 5 in stability. In miscellaneous score, we will be looking for other pros and cons of the company. In Indigo's case, they have complete market share dominance in pros of the company. But this industry has a high fixed cost and also dependency on fuel price fluctuations have its own challenges. So they get a score of 6 out of possible 10. Revenue growth of Indigo in terms of compound annual growth rate for the last 3, 5, and 7 years is 44, 17 and 19 respectively. The estimated growth for revenue for the next 5 years is around 12%, which is great. So the growth score comes 14 out of 15. For valuation, we are checking 3 factors. First is price to sales, which is 2.83 for Indigo. It is good as it is lower than 5. Justified earnings, adjusted P/E and current value of Indigo are as follows. By multiplying earnings and P/E we get proper market value, which is 2,55,000 crores. Current value is lesser than proper value, but very close, hence we can say Indigo is properly valued. By estimating future value using CAGR, NPM, and PE, we get a forecasted value of 3,95,000, which shows 80% positive returns in next 5 years. Hence we reach a score of 20 out of possible 30 in valuation. So after evaluating all the points, the final score for Indigo is 67 out of possible 100. You can pause the video for a summary. This video is only for educational purposes, not to be taken as investment advice. Do your due diligence before taking any investment decisions. Leave a comment about which stock would you love to see video on next.